Hello everyone, this is Andrew Market Prep, and we are about 30 minutes into London session. Let's look at global assets right now. As you see the candle chart up there, this is the dollar index, and it's been ranging. It's been ranging from the beginning of the session today. Pretty choppy, and it's understandable because we have quite a mixture of factors driving the markets right now. Yesterday, US-Iran talks were stalled, so that supported the dollar. As you can see, the dollar index was growing the whole day, basically. In addition to that, we've got JOLTS employment report yesterday. On the 2nd of June. That was a beat as well. On the 2nd of June, you see at the end of the session, this is the US session. Here, and dollar started growing since then. So strong labor data was released from the US, and it's been supporting the dollar. Also, yesterday we've got a strong ISM services PMI also beat, and ADP employment data also beat. So data wise speaking, US is standing pretty strong right now. And in addition to that, Iran, the fact that Iran talks were stalled, it also adds to the risk-off sentiment. And that's why the dollar has been quite strong till now. So now we see the 1 hour candle at London opening. We have a pushback. We couldn't hold above 99.5. And this is strong area of interest, sort of a resistance here. And it seems like it's hard for the dollar to get a hold of it and stay above it. So the dollar is under pressure now. We also see that oil here, the gray line chart, oil is also ranging now. And yesterday it was growing on geopolitical concerns that I've mentioned earlier. And why is it not sustaining that momentum is because today so oil has pulled back, right, after Israel and Lebanon agreed to implement a ceasefire. So this is a risk-on factor that's driving the markets today. So investors are hoping that there will be some further de-escalation, and that's why oil is not breaking above and keeps staying under this key $100 level. So we've had quite a mixed sentiment right now. We can see in the currency indices, it's also pretty a mixed picture with Swiss franc being strongest now, which is pretty weird, and I'll tell you why a bit later. Also Japanese yen, and at the same time New Zealand dollar is pretty strong, even though it's a risk-on currency. So we cannot say it's a risk-off sentiment because euro, NZD are also not so weak today. So I would say it's pretty mixed right now. Although stock indices have been selling off since London opening. So it feels like pretty mixed with some fears, with some concerns. This is a global picture. Now let's look at the asset by asset basis. So what I am looking at right now is Swiss denominated pairs such as dollar Swiss and euro Swiss. Why Swiss? And simply because today we've got Swiss data released, and it was pretty weak for the franc. CPI was a miss, and unemployment was a beat. So that's pretty dovish data for Swiss franc. So I'm looking for Swiss shorts today, and I'm looking at dollar Swiss and euro Swiss, simply because we see here a very clear range breakout in euro Swiss, and also in dollar Swiss, also range breakout. The market is above 50-day moving average, the daily candle closed, and also above 10 days moving average, and above significant support level. And the support level 0.79. And also on euro Swiss, we are also above 50-day moving average and above significant support area around 0.9170. So tactically, I'm looking for some liquidity sweep here, as I marked with an arrow here. I want this low of 91.7576 to be taken out, and I want the price to close above it, and then I will consider whether I want to buy it. And I'm thinking between these two pairs, euro Swiss expresses more of a risk on stance, because euro is more of a risk on currency, and in theory it's supposed to be more aggressive when we have a definite risk on sentiment. At the same time, dollar Swiss, basically same situation here. I'm looking for a liquidity sweep here. If we have some mixed sentiment, I would say, both dollar and Swiss franc can play the role of a safe haven. So in our current context, I am looking more into dollar Swiss because, first of all, as I've mentioned before, we've got good data for the dollar just recently, yesterday, the day before yesterday, and we have quite a mixed sentiment. So I'm interested a bit more in dollar than euro. And another good way to compare what's better to buy, dollar or euro, we can simply look at euro dollar, right? And what do we see here? This is pretty ranging here as well. If you see on the daily chart, the 50-day moving average is basically flat. 10 days moving average has been flat for the last week or so. However, we have structural downtrend since the middle of April. So if I make a trend line here, we can assume it could be a downtrend. So I'm looking for a breakout of this local support, inclined support area. Yeah. So if euro breaks down, closes here somewhere under 1590, I'm not gonna buy euro Swiss, definitely. I would prefer dollar Swiss, because if euro breaks down against dollar, that would mean dollar strength across the board. Now, this is about Forex market. Now, if we look at equities, so S&P 500 has been under pressure as AI bullish sentiment is starting to be sort of exhausted, I would say. Plus all of these geopolitical tensions, these all drag equities down. So S&P 500 has been weak the last couple of days, and also Nasdaq we see we're in a pullback currently, and it even starting to look like head and shoulders pattern, right? So shoulder, head, and possibly shoulder. Plus we are consolidating here right at Fibonacci extension, pretty global level here. So as you see, I've calculated Fibonacci extension from this wave. So here we might get some deep pullback, at least a pullback. So if tech related indices are pretty stretched, right? However, the data is okay, US data is okay, and let's say fund managers, they see that tech related equities are stretched, but they don't want to scale out completely from the US market. So what do? They would play a defensive tactic. They would try to rotate to some stable dividend paying liquid companies, and those are constituents of the Dow index. So let's look at the Dow, and here we see a beautiful rebound from this yesterday's sell-off. And what I like about it is that we are closing above 10 days moving average, even though New York session closed below 10 days moving average. You can see this dotted line. We clearly closed below 10 days moving average, but during Asian session, so that's basically a post or pre-market for the Dow futures. During Asian session and now European session, we clearly recovered above moving average, and also we recovered above these swings on the 1st of June, on the 2nd of June, and these swings happened at the most liquid times of the US session. So my time is about 9 p.m. or 9 to 10 p.m. My time is GMT plus 7 Jakarta time. So that's basically first 2 hours of New York session. These swings occurred, so we broke above them. Now I'm looking for pullback and consolidation here, and let's see if we can go long at New York opening today, because New York opening will show us the final decision of the market where we want to go. And another forex pair that I'm looking into is Canadian dollar against Japanese yen, and we can see triangle here that just broke down, and we are also staying below this area of interest that's formed since January. So if a daily candle closes where, at least where it is right now, I will seriously consider going short here. Why? Not just because I see this technical pattern, but also I like the idea of buying Japanese yen, because dollar yen is quite high, and last time it was here, Bank of Japan conducted intervention, and you can see what happened here, and it sold dollar and bought yen. So it's very likely they will do it again, and if they do, this pair will benefit significantly. Now, regarding to oil, well, we can also say, because we've got ceasefire between Lebanon and Israel, oil should ease. And we can see that it's struggling to sustain bullish momentum here. So if oil eases as well, it will help CADJPY to go further down, because CAD is an oil exporting country and it's correlated with oil. It's also Bank of Canada is not the most hawkish central bank, but this is quite a secondary reason, I would say. The thesis is mostly about current sentiment, not really about a big picture like central bank divergence. It's not much about that. It's more about current risk sentiment and dollar and geopolitical tensions. Finally, I'm looking at Spanish index, and despite of all sorts of tensions in Middle East, this index has been pressing up. And if you see at daily chart, if you look at daily chart, we've been forming quite a triangle, ascending triangle. And if we break above 18,500, that would be a good long opportunity. And considering that this IBEX Spanish stock index, considering that it's quite diversified away from the US market, that would be a good option to bet on in terms of risk on during US markets weakness. So no immediate trigger. I am still waiting and seeing how it behaves near this 18,500, and if it breaks above it powerfully, holds there, I'll consider going long. So that's about it for today, and let's stay patient. We can see this candle with a big wick, 4-hour candle. Seems like it's gonna close with a big upper wick. So I'll definitely be patient here, and especially after this yesterday's push, I would want to see how New York session gonna behave from now on. So stay patient, and let's see what happens tonight during New York opening. Okay, see you in the next entry market prep.